You are looking live at a daily chart of the Nasdaq, and it felt a lot worse today, but it was only down 67 points or 0.41%. The volume was 6% above average daily volume. There you can see that would be considered a distribution day because it's sold off on a volume higher than the prior session, but it just had an inside day. If we take a look at this, it made a new high on Friday and just pulled back a little bit today. It is now 5.2% above its 50 simple moving average. We know on Friday it closed 5.8%. So once it starts getting near that 6%, we know it gets a little wonky there. And this relieves a little bit of the pressure, these little pullbacks. These are good and healthy. And if we came back to the 10 or even the 21, that would be fantastic, because a lot of the leading stocks are getting extended and they're hard to buy. And people are asking, like, I want to own this stock. And, this is NVIDIA, and obviously just, moving higher. It did give us a couple of chances here to get in. It pulled back to the 21 here, back on the 21st. This is probably before earnings. Once, earnings were out, this thing's been ripping higher. And it's been leading the cohort higher. And, AI is the theme of this new bull market, and NVIDIA is the king of AI. So there's a lot of evidence. I'm going to get to that, but don't sell this bull market short, and if it pulls back a couple of days, it's not the end of the world. It's going to give us a chance to get in on quality stock. So, just relax. We're in a new bull market. It's going to take some time. It's not going to go up every day, but if you're in the right stocks, you can make fabulous money. And my job here at mcstockcharts.com is to identify the market direction and get us into the right stocks. Because if you're in the wrong stocks, you're going to get hammered in this market. There's some real pain going on. But anyway, NVIDIA, extended a little bit here as it's, more than 8% above its 10 EMA. So the EMA and the 21, they're rising, the 10 and the 21, but it's going to have to pull back a little bit here and allow those moving averages to catch up. SMCI, this is one that went into the S&P 500 index. Now, the problem I see with the SMCI here is that there's only 45 million shares in the float, and that is not a very liquid stock. One of the criteria for the S&P 500 is that they're large and liquid. And so I don't know if that it means that they're going to split their stock here coming up, but had a strong day, but, people are disappointed. It was up 1,155 and it closed at, 075, whatever. And it closed at the bottom half of the day's range, or you can see 40% of the daily range. But I created a video here on I'm going to put it on the side comparing this to Axon. I think there's similarities here. I'm not saying it's going to take the exact route, but Axon or Taser back in 2003, 2004 sets a precedent, for this stock. I believe this thing's up 5,000% or more now after today. But it had this, what people were saying is a blow off top where it made a high, then reversed lower and closed these gaps. Well, to me, closing the gap was a healthy thing, and it corrected 36% from 1,077 down to 692 in 2 sessions. So, people were, it emboldened the shorts to say, this thing's crashing, it's coming right back down to 300. But it never, traded below its 21, didn't even really come that close to the 21, found support at the 10 and now has bounced. Yeah, it's extended once again, but if you take a look at the video, I'm going to attach it to today's report. I think it's about 10 minutes. I think it's worth your while. It'll help you, understand what could be happening here with SMCI. This is a model book stock, and definitely one that you want in your portfolio. And, I sold it, when it made this reversal, because I knew it was, I didn't know. I figured it was going to close these gaps, right? And when they start pulling back, you don't know how low they're going to go. If it's going to get support at the 10, the 21, slice the 21 and come down to the 50, you don't know. So that's why I sold it, and then it bought it back again when it got support here at the 10. So, that's just me. I mean, I know some people just bought it way down here with me, or even back around 90 bucks and are just holding on to it, that's fine too. That's the way they want to trade. That's their personality. But like I say, I don't like to write things down because I never know how low they're going to go. Anyway, watch that video. I think there's a nice correlation there and a precedent set for Supermicro. This is AMD. We had this one on our ready list last week, and we had this. I had a 175 buy point, but really I was looking at this little kind of a shelf type pattern, and if I go to the weekly here, you can see that it traded, in a flat base there for like 5 weeks. Last week had a strong week, now follows through today. So this is fantastic action right off the 21 there. Nice little shakeout, couple of shakeouts below the 21, and now moving higher. And of course, this one's extended too. AMD had a nice 3 or 4 day bounce there, and it's 10% above the 10, so that's uncharacteristic for it. Yeah, it could keep going, 210, 220, 230, but eventually, these moving averages, the green and the pink line here, are going to have to catch up. Anyway, I'm going to move on. AVGO. So now you think semiconductors are strong and they're extended, but these guys report on Thursday, and if they report a strong report, we could see more fireworks here. You can see this one formed this ascending base pattern, had a little shakeout, and then boom, just blasted higher. This is new here for market surge. If you have market surge, this is the EPS, the earnings reported line that they have here now, and it's just another feature that I like. Of course, you see the new colors and everything. I've been fooling around with it, but that's for another day, another time. MRVL is another semiconductor stock that reports on Thursday, and like I say, if these two report, strong earnings, we could see more fireworks. Got to go to the weekly with MRVL. We had this one on our ready list. Why? Well, it consolidated all this time. It's been consolidating. Last week finally moved higher, and then today another 2.25% move. So just moving away from this base here. Like I said, they report March 7th. Anyway, moving on, because I'm going to get out of this area and go, I guess, to the hardware sector. Now, you got to listen to the DELL conference call or just read the earnings report, because they talk about demand. And when you hear these dummies saying that AI is a fraud and that NVIDIA is the only one doing anything, they talk about their demand. And of course, we know SMCI has demand. It's just certain companies don't, and NVIDIA is kind of limited to their ability to service companies. So that's one thing to be mindful of. But anyway, Dell gapped higher, 30-something%, 32%, with volume. Today just had an inside day. So this is definitely one stock that I'm watching here. The moving averages need to catch up. I don't want to see it, fall below that 116.45. It's not the end of the world if it does, but if it decides to fill that gap, that's a trip that I don't want to take. I would like to see it, stay above the 116, 117 area. So anyway, it's definitely a stock that I'm watching. Okay, I got to get to the software names. There's some real weakness in Snowflake, and quite a few software names. After their following their earnings report, where the CEO stepped down, it had some selling, big bouts of selling, and more selling continued today as it sliced its 50. One of my sell rules is, they slice their 50 with volume, it's oftentimes I'll wait to the end of the week, see if they bounce, but this one didn't. Today it just pulled back to its 200 simple moving average, and that coincides with this. I've talked about this a couple of times with Snowflake. This is where it's been support all along the way here, all for a long time. Okay, the high here 178, 179, there you go, 178. Often it stops there at 178. It's just 181. So that's definitely an area of interest here. But if it doesn't get supported to 200, like I expect it to, and kind of form a base here, if it continues this type of selling, this is definitely a no-go. That's definitely avoid, with a big red caution sign alert. You don't want any part of that. ESTC, another report, strong report, and just sold off. So it sliced its 50 as well. I thought it was going to, undercut and rally today, but it didn't. It continued to the downside, 7% lower with strong volume. That's definitely an avoid, because if it takes the trip like snow, did down to the 200, you don't want to take that trip. That's a long way for ESTC. And Elastic gapped up higher a couple times prior to earnings, but this time it's gapped lower, and that trip to the 200 is at 85 today. So that's a long way to go, folks. So that's why I say avoid. That's one of my sell rules. And that's just the way it goes. I mean, that's just the way it goes. If you held that one through earnings, just, if it was me, I would depart. There's other things to own. Datadog, this one's starting to worry me a little bit too. It's coming down to its 50 way too often here, and it needs to power higher. Still trading tight, yeah, I guess you'd call it, within a base here, the 120 to 138. Kind of a flat base pattern, but it needs to power up here and find support. It can't just sit here along the 50. That's not a good sign for Datadog, but it's one that I continue to watch. We'll see what happens. Palo Alto Networks, people were sending me some stuff on this stock that I think, we do use it for a trade. I had it on my ready list last week because I thought it was oversold, and it bounced off to 200 and just came up to the 50, and then it got rejected. So the trade was, 280 to 320, so that's it. You got to get out. Just a little swing trade, and it got rejected at the 50 now, and this is, for me, is an avoid. Zscaler, same thing, sliced its 50 on the Palo Alto Networks news, and then rallied through. So that's what you want to see, the undercut and rally, but it's got to rally and make new highs. It can't rally and fail. And it had earnings last week, sold off with heavy volume. Another avoid, because this one's likely to come down to the 200 as well, which is 178. You don't want to make that trip. I don't want to make that trip. CrowdStrike reports tomorrow. They're probably going to report a good report as well. I'm a little leery though, the way the other ones have responded. I would expect this one to sell off, but I'm sure they're going to have a good report, but it's just kind of mechanical at this point. It hasn't had a base in a long, long time. So CrowdStrike needs to form a base. Not the end of the world if these stocks form bases. It gives us a chance to buy. Eli Lilly had a base during, when the Nasdaq started its rally in November, December. This one was just in a base. Now the new year starts and it's starting to run, and it had earnings and ran up to 794. Formed this little shelf type pattern, and now it's made a new high today. There was a lot of stocks that made new highs and retreated. Lilly was not one of them. It made a new high at 878, and closed at the, what was it, 42% of its daily range. So yeah, I think a lot of stocks sold off into the close today. Novo Nordisk, you can see its gappy chart because of, it trades overseas. It gapped higher today. Kind of surprised me how much strength this thing had today. Just a tight range though, and it closed at 54% of the daily range. So, just a real tight range. Oh, the high was 128.77, the low is 126.99. So, not a lot there, $1.70 something in a range. That's not a lot for a stock like that. VKTX, Viking, now they had a secondary offering at 85. It was oversubscribed. There's demand for this stock. This is looking like it could be a high tide flag. What the heck is a high tide flag? Well, a stock that goes up, 100% or more, and then doesn't give back more than like 25%. It's going to take at least a couple of weeks, though. The textbook is, 3 to 5 weeks. So this one needs time. It's only been a week since it made this 100 and whatever it was, 100 went up 120% in a day. So what you want to see it, if you're long like I am, you just want to see it, tighten up, between 80 and 95. That would be great. 80, the secondary is at 85. So we'll see if that can be a support now. And I still expect some selling in this one, but longer term, this is an excellent buyout candidate. And they have, a lot of big pharma companies knocking in their door, I'm quite sure. AQST, I mentioned this stock, and people, I was surprised at the response I got for a, $4 speculative biotech stock, but you got to look at their the roadmap for this company, because it's a long-term story. This is not something that you're going to buy and it's going to double in a week like it did. This is a longer-term story. They have a readout coming. First of all, they have earnings tomorrow morning. They have a conference call on Wednesday to discuss their roadmap and their business plan. So I think if you're interested in this stock, you need to read their EPS report and listen to their conference call, and then you have a better understanding. This is something that I like because I think, if you can hold a stock for a year or more, then, Uncle Sam's a little more favorable to you. And if, you hold it for a year, I think it can get back above, at least double digits. I don't know what this was here at $9. Yeah. So, before 418 to, $9 is a double in a year. I'll take that, and I'm not expecting a lot of, big moves. It's not NVIDIA, it's not SMCI. It's a speculative biotech stock, but just learn, what they have to offer, and don't get too excited about, trading it. This is a long road to hoe, and launching a drug is not an easy thing. A lot of things have to go right, and many things can go wrong. So there's no guarantees or no free lunches in the stock market. But I do like this one, and they have earnings tomorrow morning. Okay, I've got to go to the other S&P 500 stock that's part of our leading stock group. I have this as a 903 buy point here, because it just formed this shelf. It made this high following earnings and just kind of formed a little shelf, a little flat base here, and now it broke out above. Of course, it was selected to join the S&P 500, and it got big volume today, but still, 903.70, anywhere between, I don't know, maybe about 930, is not chasing really. Definitely a strong stock though. And you think, oh, I can't buy it up here, but yeah, it's probably going to go higher. Okay, ONON, they are reporting earnings on the 12th, which is, I don't know what, next Thursday, a week from this Thursday, or Tuesday, next Tuesday. Okay, tomorrow's the 5th. So, but this one's shaping up nicely in this, big consolidation, big base, pulled back a couple of days here. I like the way this one is shaping up into earnings. The problem is you got to own it into earnings. And if you don't have, a decent cushion, my rule is to have at least, its worst day plus a 5% stop loss. So I don't know what the worst day is for On Holdings, if it's 8% or 10%, but I would add that to, there's 4%. So let's call it 10%. You have at least a 10% cushion heading into earnings. Oh boy, it was down 10% this day. So you need a 15% cushion going into earnings. And that's just a formula I use, and that's no guarantee. Nothing's foolproof in the stock market, but that's just, one of my formulas that I like to use. Celsius, this one had good earnings, and, I had a buy point here at the 50s. This one undercut its 50 and rallied through with volume. That's always a good sign when you see a stock rally through with volume and power higher, unlike, some of the other ones I showed you earlier that is kind of floundering. This one had good earnings and ramped up. Pulled back on Friday, made a new high, then pulled back. Today makes another new high, and it was up, nearly 10%. So if you didn't get that one, you're wondering how to get in. This is the 8-week hold rule, by the way. And you're just gonna have to wait for a pullback there, because I don't know, the moving averages are trending higher, and you sometimes you just got to say I missed it. And if you want to buy it, you're just gonna have to wait and be patient, show some discipline. The last one I'm going to show in retail, maybe not. Abercrombie and Fitch. This is my Kelly Slater stock, just surfing to higher highs. They have earnings on the 6th. Still a cheap stock, regardless of how long this thing's been going. And it's been whatever it is, a 5-bagger. Still pretty cheap stock, trading about 2 times, less than 2 times sales. So it's got 4 billion in sales and less than 7 billion market cap. So Abercrombie and Fitch, they report. And the last one I'm going to show in retail is ELF. Made a new high today. This thing was getting a little too hot, and it reversed and pulled back 3.5, almost 4%. Big volume reversal here. That's never a good sign. Closed at 21% of the daily range, but it needs a breather. It's run for a long time. I was really surprised how it went right through 200. I expected it to have trouble there, and it still might. I mean, if it just traded between 200 and 210, I'd be thrilled, and allowed these moving averages to catch up, just form a flat base for 3 or 4 or 5 weeks. That would be fantastic for ELF. A couple of Bitcoin. I have to mention the Bitcoin, the crypto, digital currency stocks, because they've been going ballistic. Bitcoin was at over 65K this morning. I haven't really looked at it. But MicroStrategy, they've been buying up Bitcoins up 23% again today. Man, talk about a gappy chart. MicroStrategy trades with the digital currency markets and obviously trading higher. Coinbase, this is the platform a lot of people use to trade cryptocurrency. We had this on our ready list there, and it just took off, pulled back. Classic textbook cup with handle pattern, and then blasting off higher. Up 11% today. And if you don't want to mess with any of those, you just want to get into one of these exchange traded funds. And this trades with the price of Bitcoin. This is BlackRock's new exchange traded fund. There's other companies in it, but anyway, that's a safer way to play. It just trades with the price of Bitcoin. Anyway, that's it for me today, except for I lie. I have one more thing. In the honor of the great Steve Jobs, I have some oil and gas stocks we need to pay attention to because they're perking up big time. This is Tidewater, moved up on Friday, 14% after its earnings report. Up again today, 2%. So definitely always want to keep your eyes open for rotation and don't just get stuck in one area. And this is weather forward. This one's still set up in a base here. And you can see it tried to break out last week, now pulled back 3.2% today. So if you're looking to get in this one's going to show up on our ready list once again. I was waiting for that little pullback there. Matador is another exploration stock, setting up in a base here, pulled back today, close to its moving average. So definitely looking at that one. FANG, another U.S. exploration stock, ramped higher and pulled back to the 10 today. So that one is an area of interest for me, for sure. VNOM, another, this one's U.S. exploration, Permian Basin, and definitely broke out of a base. Got to look at the weekly here. Long base and now trading higher. VNOM looks fantastic. And that's it for me, except for GitLab reported this afternoon, selling off 15%. A little bit of a haircut. I think they lowered guidance. Anyway, that's it for me today. I have to make a video on, I have some questions about selling stocks. So I'm going to make that video and post it on our education center. Anyway, thank you for watching. Tomorrow's another day. And at mcstockcharts.com, we never give up.